What's going on, everybody? This is Phil with Millennial Money Gains, and welcome back to a brand new video. In today's video, we are going to be doing a stock analysis on a dividend stock that happens to be my best performing stock in the dividend portfolio. I just want to run through this one because this one is an absolute dividend beast, and it has been really picking up my portfolio with the market downturn that has been going on. If you guys are excited for this video, and obviously you can see which stock we are talking about here today, it is Abbvie. Make sure you guys smash that like button. Also, comment below if you guys hold any Abbvie, or if you guys want to get into the position, or what you guys take is on this dividend play. Also, if you want to join the family, we talk about dividends on this channel, and you guys can follow my dividend journey. And we are transitioning towards more just straight dividend content. So if that's interested to you guys, make sure you guys hit that subscribe button. But now let's hop right into the video. So the stock obviously we are talking about today is Abbvie. Ticker symbol is ABBV. So this is my position here in Abbvie. I have a total of a little over 17 shares with a total market value of $2,400. My average cost is $110.83. Abbvie is currently sitting at $140.44. I am up a whopping almost 27% on this play, which is just over $500. And we are going to be receiving a dividend from them. We will be receiving $1.41 per share, so which is a total amount of $24.22, and that will be paid out to us on February 15th. I will be reinvesting these dividends right back into the company, so that way next time they pay a dividend, it will be just that much more. That is how we get this big snowball effect that all these dividend investors talk about. Obviously, $24 every single quarter is not the biggest amount, but it's $24 this time, be $25 next time, and then the ball keeps rolling. Eventually it will be $50, and the ball keeps rolling. You do that with 10 different stocks, and you got a really good, big, giant dividend snowball here. So we're going to hop right into the company and talk exactly about what Abbvie is. So as you can see here, it is up almost 32% in the past year, and in the past 6 months alone, it is up 21%. So it is trading at a premium right now. And let's see, we're going to hop in and see exactly if there was a good reason for that, or if this play is just simply overvalued. So what exactly is Abbvie? Abbvie is a pharmaceutical company, and they sell different products and medicines worldwide. Their biggest one happens to be Humira, which is a therapy administered as an injection for autoimmune and intestinal Behçet's disease. They offer Skyrizi to treat moderate to severe plaque psoriasis in adults, and amongst others. Those are the big two. I have seen commercials all the time for both of these medicines. But let's hop right into financials and whether we think Abbvie is a good time to get in, or if this one has had its run and it's going to be a bit of a pullback coming up. So let's hop right into the financials. We're going to take a look at their balance sheet quickly and just seeing how many shares they have outstanding, and see if they're buying any shares back, or if they are issuing more shares to dilute the shareholders. Obviously, we want to see them buy some shares back, because that creates more opportunity for the existing shareholder and gives the existing shareholder more of the company. For example, just to explain what I mean by that, if there are 10 shares of Abbvie that exist, I own one of them, I then own 10% of the company. But then if they buy back some shares and now there's only 5 shares that exist, even with that one share, I now own 20% of the company. So that is a power of share buybacks. And it also works in reverse if they are issuing more shares. So, in the case of Abbvie, in December of 2017, they had 1.5 billion shares outstanding. And now, in the case of December of 2021, they have almost 1.8 billion shares outstanding. So that's not a good sign here. Definitely not what we want to see. We definitely want to see them pulling back and buying back some of those shares. But now let's hop right into the dividends and see exactly how much they pay. So they do have a 4% yield or so, with a 5-year dividend growth rate of 17.71%. This is huge, getting a dividend raise of 17, almost 18% every 5 years would be absolutely ridiculous for your portfolio. They do have dividend growth for the past 8 years, and they pay $1.41 per share per quarter, and they pay their dividend on a quarterly basis. So I do think this stock has definitely more room to grow their dividend and hopefully bring that dividend growth from 8 years all the way up until 25 years, because unless something changes with the company, any fundamentals, I will be holding this play for a long time. Now let's hop right into their financials and look to see exactly how this company is valued and whether we think we should expect a pullback sometime soon, or if we think this is just the price that it's going to be at and we just have to accept it. So they do have a market cap of about $245 billion with a PE ratio of just about 21.82. They have a price to cash flow which is 11.03. That's a little bit expensive for my liking. A price to sales ratio of 4.45. They have total revenue of $56 billion. Revenue growth of almost 23%. So that's what you're paying for right there. We're going to hop in and see exactly how much their revenue has grown in the past 5 years or so. So we're going to look exactly, seeing obviously revenue of 22% is very hard to compound year over year. But we're going to look into exactly and see what their earnings, what their revenue was from 2017 to now in 2021. So 2017 they had revenue of $28 billion. And now, all the way in December of 2021, they had revenue of $56 billion. So within those 4 years, their revenue just about doubled, which is really awesome to see within 4 years of revenue doubling. And we can see this consistent growth here. So we went from $28 billion to $32 billion to $33 billion to $45 billion. And now $56 billion. So we are seeing some steady growth there. So what do I think about Abbvie as a stock to buy now? Personally, I think it is a bit too expensive for me right now. I will not be adding any more to this company besides my dividends that I am reinvesting into the company. I will like to see a bit of a pullback, maybe to the $120 area, before I start adding more shares in this. Right now, there are a lot of other options in the market, so I don't think there's a reason to chase a company like this when you can expect a bit of a pullback from them within these next couple of months. I do think there will be a bit of a pullback. I'll be very attractive in looking up some more, getting more, a bigger position if this hits the $120 range again. But until then, I'm going to keep my distance. Personally, for me, it's not a time to add more. It's just a time to sit back and collect the dividends, and I'll reinvest those dividends as they come into Abbvie. But I will not be putting any more of my own capital into the company anytime soon. There were just too many other options out there at very good prices. But let me know what you guys think about this play in the comment section down below. I really do appreciate all the feedback. Also, make sure you guys smash that like button for all the work that goes into making these videos. hit that subscribe button, because on this channel we talk about mostly dividends, and I would love to have you on the road and the journey to a $100,000 portfolio. We are still far from that, but we are growing towards it every single day. Thank you all for watching, and I will see you in the next video. Peace!